Hello and welcome back to Islamic Finance Unboxed. Today, we're diving into a big question. How does the Islamic Development Bank compare to giants like the World Bank, the EBRD, or the Asian Development Bank? And, more importantly, is it really doing something different, or is it just another bank with a different label? What development banks do? Let's start with the basics. Development banks are international institutions created by groups of countries. Their mission? To fund long-term projects like roads, bridges, energy plants, and even schools and hospitals. They provide loans, guarantees, and technical expertise to governments and sometimes large private sector players. Think of them as the engineers of national economies, shaping entire regions with big-ticket investments. The big players. First, we have the IBRD, the backbone of the World Bank. It lends money to middle-income and credit-worthy low-income countries. But here's the catch. These loans are interest-based and often come with policy conditions. Then comes the EBRD, the European Bank for Reconstruction and Development. Its role? To transform post-communist countries into market economies. It invests in infrastructure, trade, and private sector reform, again, using conventional loans and equity. Next, the Asian Development Bank, or ADB. It serves Asia-Pacific nations, offering concessional loans, grants, and project financing. Its goals often sound noble: reduce poverty, fight climate change, and build sustainable growth. And finally, the Black Sea Trade and Development Bank, or BSTDB. It's smaller and regional, covering 11 member states around the Black Sea, including Turkey, Greece, and Russia. Its mission: boost trade, SMEs, and regional integration. One thing all of these banks share? They rely on interest-bearing loans and global bond markets to fund their activities. Enter the Islamic Development Bank. Now let's turn to the Islamic Development Bank, or IsDB. Founded in 1975, it was designed to be different, a Shariah-compliant development institution. Instead of charging interest, it uses instruments like Sukuk for raising funds, Murabaha for trade financing, Ijara for leasing projects, Mudarabah and Musharaka for partnership-based investments. That means every loan, every project, must be asset-backed and Shariah-approved. It funds hospitals, schools, roads, energy plants, but it avoids the interest trap. One of its biggest achievements? Building a global Sukuk market, giving Muslim-majority countries access to ethical, large-scale funding. How IsDB differs from Islamic banking? Now here's the nuance. Islamic banking, the kind you and I use, focuses on retail customers and SMEs. It's about home financing, trade, savings, and Shariah-compliant investments. IsDB, on the other hand, plays at the macro level. It funds sovereign projects, railroads in Africa, energy plants in Asia, and humanitarian support in war-torn regions. In other words, if Islamic banks serve households and small businesses, the IsDB serves entire nations. The global question: but can a faith-based bank compete with giants like the World Bank? Here's the challenge. World Bank and ADB have trillions in funding power. IsDB, while growing, is still a fraction of their size. Many Muslim countries still borrow from the IMF or World Bank, even while being IsDB members. Yet, IsDB has a unique advantage: credibility in markets that want to avoid debt traps. For countries weary of IMF-style austerity, the IsDB model of partnership and risk-sharing is a moral and financial alternative. Islamic development banks, driving Shariah-compliant growth. When we think about Islamic finance, we often focus on commercial banks and retail products. But there's another pillar quietly shaping economies: Islamic Development Banks, or IDBs. Founded in 1975, the IDB group now includes multiple regional and sector-specific banks. Their mission is clear: support economic development in member countries while adhering strictly to Shariah principles. Unlike traditional commercial banks, IDBs don't chase profit through interest-based lending. Instead, they provide project-based financing, often through Murabaha, Mudarabah, and Sukuk structures, allowing governments and enterprises to invest in infrastructure, energy, education, and healthcare without violating Islamic law. Let's break it down. Funding projects, not debt. IDBs finance public and private projects directly, creating tangible assets instead of issuing loans tied to interest. Capacity building. Beyond money, they train local banks, regulators, and entrepreneurs, ensuring sustainable development. Regional development. Institutions like the Islamic Development Bank, the African Islamic Development Bank, and the Asian Infrastructure Investment Bank, Islamic arms, serve as engines of growth in underdeveloped regions. For example, consider a renewable energy project in Indonesia. Instead of borrowing at high interest rates, the local government partners with the IDB, which provides capital via a Shariah-compliant investment contract. The profits from the project are shared, risks are distributed, and no interest is charged. This model is crucial for countries with growing Muslim populations. It demonstrates that development financing can be ethical, sustainable, and profitable, aligning with the broader goals of Islamic finance: risk-sharing, fairness, and social impact. In short, Islamic development banks are the backbone of a faith-driven economic growth model, proving that finance can empower communities while staying true to ethical and religious principles. So, are development banks and Islamic banking similar? Not really. Conventional banks focus on interest and debt. Islamic banking focuses on asset backing and ethics. And the Islamic Development Bank sits at the crossroads, bringing Sharia-compliant tools to the scale of global development. The real question is, can it grow big enough to challenge the dominance of the World Bank and its allies? That's for the next decade to decide. Thank you for watching Islamic Finance Unboxed. If you found this breakdown helpful, don't forget to like, share, and subscribe for more deep dives into the world of Islamic finance.